Good morning and welcome to the Trade Talk podcast. In the US, Fed officials decided unanimously to hold rates in a range of 5% to 5.25%. Though the central bank's forecast imply two more hikes this year. Jeremy Powell said it's appropriate to moderate the pace after the scramble to tighten in 2022. He played down the dot plot forecast but said inflation risks remain on the upside and any cuts are a couple of years out. Swaps suggest a reduction in 2023 is unlikely. Asian markets are trading in positive and Singapore Nifty is marginally down. So one thing is very clear that they have taken the stance of pausing the rate, but again they kept it open that if they see the data is again improving economic data, then they will increase their interest rate, and that's the reason the market turned negative in the US, and today we are seeing some weakness for our markets. The dollar index was around 103 and the 10-year bond yield jumped to the levels of 3.80. So the gap between 10-year yield and 2-year bond yield is still of 90 bips point, which indicates that there is recession is far away, and that will actually support the market in terms of again the performance from the equity side. So we may see some correction after this particular statement or particular event, but later on again we are expecting some recovery in the US market. For our market, the level of 18,690 is crucial. Below that we can expect some weakness, which will send the market to 18,600 levels. The strategy should be to look for adding long position if we see the market is dropping to 18,600 or 630 with a stop loss at 18,500 as it's a day of weekly expiry. So we are not expecting market to fall so quickly below the levels of 18,600, but yes, below 18,700 if it sustains, then we can expect some weakness during the day. On the higher side, again cautiously the market will try to retest the levels of 18,780, which was the highest of the previous week. Until the markets are not crossing these levels, we are going to see sideways to range bound sort of activity. Above 18,780 or at above 18,800 we can say, we can expect some short covering, and that will lift the market to 18,900, which is crucial, which is important to cross in the current month. Otherwise the market will take a long halt. That's the view based on technicals. For the Bank Nifty, 43,800 was the support level. Yesterday also it was around 44,200, but it failed to sustain at higher levels on the back of weakness in ICICI Bank and in other large heavyweight banks. So below 43,800 we can expect a quick drop to 43,600 to 43,550 levels. The strategy should be to buy if it falls to 43,600 or 550 levels, or if we get opportunity to sell, then sell below the levels of 43,800. On the higher side, 44,200 to 250 going to act as major barrier. Now for Nifty IT, again the activity is completely mixed. We are expecting mixed movement between the range of 29,000 and 28,300. As there is performance in Chinese market, we are expecting some activity in metal stocks, as well as we can expect some activity in capital goods and engineering stocks. That's all from my side. With this, I am ending today's call. Thank you.